Marathon is one of the original NASDAQ listed companies that is a pure Bitcoin mining company. There's a lot of companies that are joining this industry now. They have a lot of catching up to do with Marathon. We purchased 103,000 S19 miners from Bitmain. I believe it's the largest order that they've ever had in terms of dollars and number of units. When all those are installed after they've been delivered from Bitmain, we'll have over 10 exahash of hashing power. That today, where the network is today on the blockchain network, would be almost 7% of the blockchain network. So clearly one of the largest Bitcoin mining companies. What we also did, which was quite unique, is we formed a partnership with a utility company, and we placed all of our miners adjacent to their power facility. So they leased us 40 acres. We surrounded that with a fence. We built new substation, transformer switches, and we are placing all of our miners adjacent to that facility. So that makes us, we're not buying power from a utility company or from the grid. The rate on that power was 2.8 cents per kilowatt, which I believe is one of the lowest in the Bitcoin mining industry in North America as well as China. And that allows us to produce Bitcoin that are trading today near $60,000. We make our coins for about 3,500 bucks. We also announced a couple days ago that we're launching our own mining pool in North America, which I believe that's of national security interest to secure the blockchain, as well as the Bitcoins that we mine will be virgin Bitcoins, and they will be OFAC compliant with the US Treasury. We don't know of anyone that has done that yet. And we think that will create demand for our coins that we create from institutions who prefer to only buy coins that are following the rules and regulations of the US Treasury.
Can you talk about what goes into that? Is it dependent on when the machines get delivered? Is it dependent on the energy deals? Can you just take us through? I mean, that's crazy explosive revenue growth.
Sure.
So the details there are helpful.
That's a great question, and thank you. That is all derived from the decision after the halving in May of 2020. Our board decided that we were going to become very aggressive, and we remembered what happened in 2017 when Bitcoin went from $100 to $19,000. The machine prices from Bitmain exploded. They went from $500 a machine to almost $9,000 a machine. We expected if Bitcoin had a large rally, that would happen again. The miners would become very difficult to purchase and the prices would go up. So we raised all the capital we could, bought all the miners that Bitmain would sell us. And now as those are deployed, that's the reason for the increase in revenue. As those machines are shipped every month from Bitmain in their Malaysia location, we deploy those miners at our facility in Hardin, Montana. And every day we add miners, and every day the number of Bitcoin we produce is going up. And it's just great timing. We really hit it right at the perfect time to become aggressive and buy all those machines. Secondly, the low cost that we pay for our power lets us be, we believe, the low cost provider in North America for creating Bitcoin. So it was really timing. That's what's going to generate the revenue. As the machines arrive, we deploy them and we create more Bitcoin every day.
Excellent. And the next question that I had was to dive into competitive advantages, right? How you guys compare to other miners. I know that you've already covered part of that with you talked about the energy deal and also all the machines that you guys have ordered. Is there anything else on the competitive advantage side of things that we should dig into?
Sure. Really, I think just being public, being a NASDAQ listed company allowed us to have access to raise capital. Many other miners are either A, they're private, or B, they were small bulletin board or microcap companies and did not have access to the capital markets like we did. We've been able to raise, if we wanted to raise $500 million today, it would be no problem. So the interest in owning a NASDAQ listed company that is probably in North, that institutional money, and gives us the ability to raise capital should we need it. Right now, we have $215 million, $216 million in cash. We also purchased from our treasury $150 million in Bitcoin. When the last decline happened from 42,000, it went down to 28,000. We deployed $150 million, bought 4,800 Bitcoin. Those today, just 3 months later, are worth almost $300 million. So that gives us about $515 million of liquidity on our balance sheet, and we have no debt.
And is the plan to sit on all that Bitcoin, or is it to slowly sell it off, or what does that look like?
We don't plan to sell it. We do plan to hold it and give our investors essentially a NASDAQ listed, almost like an ETF. We don't know the future. If there came a time that we needed some capital for something that our board thought was strategic, and we needed that capital, we could raise some capital from that, or we could raise capital in the capital markets. But our plan right now is to hold all of our Bitcoin that we own currently, and all of the Bitcoin that we generate as Virgin Coins.
Okay. And right now it's Bitcoin that you guys mine. It's Bitcoin that we're talking about. Thoughts on expanding to other coins, like Ethereum is one that I see thrown out a lot on Twitter, or anything along those lines.
Sure. We've seen a number of our competitors do that, and frankly, I get asked a lot if why we don't mine Ethereum, why we don't mine some of the other coins. They certainly do generate at these prices substantial profits. But we made a decision to be just a pure Bitcoin miner. And because we did that, more like an ETF, if people want to buy Bitcoin, instead of opening an account on an exchange and going through the process of the anti-money laundering and know your customer rules to get that account opened, and then getting money in that account, then not losing your key, some people feel it's just better to own our stock. And if you look at that presentation that you mentioned, Luke, you can see times, and I'll just give you a recent example. In the last pullback in Bitcoin, our stock went from $50 down to $24. Bitcoin in 5 days went up 38%. Our stock went up 80%. So we do have a lot of, I believe, institutional money and algorithmic trading institutions that like our stock because of that alpha. And if you're looking for a way to be, if you're a good stock picker and your timing's good, if you think Bitcoin is bottomed, you can buy our stock, and it's likely that the move that you get in Bitcoin, you'll get a bigger move in our stock. So we see a great deal of volume in our option activity. The notional value, if you take every option outstanding today times its current closing price, the number you will come up with is astonishing. It's close to $1 billion in notional option value. So deep book in our option trading, as well as excellent liquidity in just the daily trading of our stock on the NASDAQ.
Okay. And as an aside, Merrick, I've got to say, we do have a lot of chatters commenting about your master shirt. They're big fans. So very timely to wear that one. And I guess getting away from the stock for just a minute here. What is it like to go into some of those Bitcoin mining rooms? Like is it noisy? Are they cold? I've always wondered what it's like to go into some of these major production facilities. I've never seen one.
We've done two styles of data centers. The first one we did, and I think many people did, is when you were looking for power, the way to find it was to lease an old building, 100, 150 years old, 100,000 square feet, that used to manufacture something in the United States that now that manufacturing base moved offshore. So you have these large empty buildings, cheap power located nearby. And we did that at first. So we leased a building, we put fans in it, we brought in all the electrical and transformers and switches inside the building, installed racks, and we installed a few thousand miners. And quite shocking to me, I'll admit to you, we turned them on and the fans were so loud and the suction that they created was so strong, the vacuum pressure, that it looked like it was snowing in the room. And what it was doing is it was peeling the paint off the ceiling and the walls in this little building. And those were going in our miners. So we figured there had to be a better way. We've been at this a long time. We've hired excellent people that do our hosting for us. And so now we build our special purpose containers. These containers allow us to control an environment inside of a box that's literally the size of a shipping container. Now we only control the environment in the box instead of trying to control the environment in a giant old building. So what does it sound like? When you walk in that room, it's very, very loud. These machines scream at a super high RPM. You have to wear headgear to protect your ears. We try to keep these rooms at a pretty constant 50 to 60 degrees. That's where the miners like to operate. And that's done by using the fans and the ventilation system to move airflow in and out to keep at those temperatures. One of the reasons we chose Hardin, Montana, if you just think about it, it's pretty far north in the United States. So it has a very cool climate. And that's been excellent. Our miners love it. We're generally, I see a dashboard, I can look at it right now and see how we're operating. And we're
That's
at
awesome.
99.99% of our miners are running. And it's because they love that environment that we've built.
Okay, great. And then can we talk about the pool a little bit?
Sure.
So you guys put out a press release, I believe it was maybe a week ago or a couple weeks ago, talking about the Bitcoin mining pool. Can you dig into that? What advantages that presents for you, et cetera?
We believe that, you know, if you just look at the landscape of the mining pools, most of them in this that miners are pointing to are all domiciled in China. And if you look at what a Bitcoin mining operation does, we validate transactions on the blockchain. And many corporations now are moving their analog paper type systems and they're making them digital and moving them on a blockchain. As they move those onto a blockchain, they need validation for transactions to be proven and validated. And we get paid to do that with our miners. If you try to go it alone and just put all your miners on the network by yourself, you could win some validations and there might be days that you did not. So everybody comes together generally in mining operations and they pool together and choose a mining pool. All the mining pools, for the most part, the largest, say five, are based in China. And it's our belief there's two issues with that. One is there's geopolitical risk. Having all of our machines pointed to China in a situation where we can't control the internet there, what the government may do there, we would like to onshore that. And we've talked to many other large enterprise miners, and they want to do the same. They want to point their miners to a pool in the United States. The second issue, and what I think is unique about our pool, is if you look at the rules, their OFAC rules from the U.S. Treasury says you should not do business with these parties. These are known sex traffickers. These are, maybe Hezbollah or terrorist organizations. And we can see, we take an API from the Treasury that shows us the wallets, who the end recipient is, and says it's illegal for you in the US to do business with these parties. So we're a US NASDAQ listed company. We want to follow the law. So we're creating a pool that looks at the process that we're going to mine a transaction, and we look at the end result, who the recipient wallet is. If it's on the OFAC restricted list, we skip it. So it doesn't mean that we're censoring that transaction. Someone else will mine it, just we won't. Marathon will not mine something that the recipient wallet is on a list that the Treasury says it's illegal for us to do business with. We believe that once we start creating these coins at the beginning of next month, and we're going to put them in a separate holding, separate blockchain for them to be held in, there will be institutions that want to buy that coin that is virgin OFAC compliant to US laws versus buying a regular Bitcoin. I think it'll trade at a premium over time. And there are institutions that just, their bylaws won't allow them to invest in something, and they're waiting to use some of their US Treasury assets until something like this comes along. And if you read or just Google it, numerous articles have been written and a number of interviews in the last 2 or 3 weeks saying institutions that have not yet joined and purchased Bitcoin, that's the reason why. They're waiting for this clean OFAC type coin to become available, and we're going to provide it to them.
Excellent. I'm getting a lot of questions in the chat talking about the energy relationship. I know you mentioned it's not a utility that you're partnering with, but it seems like it's a company that actually produces energy. Could you circle back to that for just a second and clarify how exactly that relationship works, and how that allows you to have, as a competitive advantage, cheaper energy than competitors?
Yes. So that facility can produce 100 megawatts of power. The company that owns that power plant is a private company called Beowulf. And what we did is, the term for what we're called is, we use all the power that facility will create. That makes us what's called a base load user. So the power the facility creates doesn't go through transmission lines and out to a utility network and share that power and then have to come back to us. It comes from the power plant literally into the new substation we built and the transformers we purchased, and the power goes right into our specially built trailers to power our miners. We've looked at many other facilities throughout the country, and most of them you buy from a local utility. That local utility then buys from the grid, and that grid buys from a large consortium. So there are a number of parties in your power pricing, and you can't control, some of those change their power rates every year. And we developed a very long-term contract with Beowulf that locked in those energy prices, and we don't have the risk of some of the things you saw in Texas, where they're buying from a grid and that grid went down and there was an interruption of power. We're buying directly from the power plant, same ground where our machines are located. So I think that gives us a real unique advantage over some of the other enterprise Bitcoin miners.
Awesome. And Merrick, I want to be respectful of your time. I know we just have a couple more minutes here, but can you talk to us about timeline and what's next? Timeline either for machine delivery, what should we be paying attention to as investors out of the company, et cetera?
We just published, as you saw today, and we included in that a timeline showing, we're very transparent, shows when all of our miners are supposed to be shipped. You can track that timeline. We're going to publish that report every month around the first of each new month and tell you how many we installed in the previous month, how many coins we made, what our current hash rate is, and what we expect to be delivered in the next month. Those things are out of our control. If there were logistics problems or shipping problems from Malaysia to us, then we'll have to deal with that. So far, Bitmain has honored every single thing that they said they would do. They've not only done it, they've delivered them early. And I'll give an example. The March shipment was supposed to be shipped by March 31. They shipped us half the units on March 15th and the balance of the units on March 21st. So they've been a great partner for us. They make a premium product. The S19 Pro and the S19J are amazing miners. They produce the highest number of hash rate per the amount of electricity that's required to turn those machines on of any other machine. So we see every day somebody puts out a press release, hey, I've got 10,000 machines. Well, do you have 10,000 machines producing 40 terahash, or do you have 10,000 machines producing 110 terahash like the ones we bought? So we really care about buying state-of-the-art equipment. And I think what you'll see from us in the future as our cash flow continues to rise, we will always be adding miners to our fleet and continuing to grow and try to maintain our dominant position as being the largest miner in North America.
Awesome. Merrick, thank you so much for taking the time and hopping on with us today. Again, guys, if you don't know the stock, it's because you have not been paying attention to the market for long, because it has been one of the hot ones. Ticker MARA. Merrick, thanks for hopping on the Power Hour.
Sure, appreciate it. Thanks for inviting us.
Absolutely. All right, guys. So